Carolina. We are recording. All right, so we're recording. Let me go back. I am Comilla Mays, and I reside in Lexington, South Carolina. That's maybe 15 minutes outside of Columbia, which is the capital of the state. I am married to my awesome husband, Calvin, and together we have 5 children, right? We have 5 whole children, ranging from 25 to 5 years old. Our baby is 5 years old. I have been in business and finances coming right on 20 years. 20 years. I have my master's in business administration. Also, my minor is in accounting and finances, background in auditing and banking. You name it, all things finances. I've done it. Human resources, done a little bit of that. So I love numbers. I love, just solving things, right? I guess that's where that solving things come from. But, just always love math in school. So I continue on with the accounting and the finances and all that good stuff. Plenty licensing, certificates, things of that nature. But I have been doing this, and where I got the most of my experience is in the field. I've been doing this for almost 20 years, and I absolutely love it. And Dr. D and I met about two and a half years ago at a high-level coaching program. And we went to lunch together, myself, her, my husband, and another young lady, and the rest is history. We have been, working together since then, and it's been a beautiful relationship. And so we're here tonight just to bless you guys with some information. We're going to be talking about business. We're going to be talking about business taxes and all those different things, because this is the season that we're in. Some of you all may be new business owners, some may not, but this is a new era because we're in tax season, and as a business owner, it could be a little challenging. You may not know where to get started. You may be familiar doing your personal taxes, and now you're a business owner. It's like, what do I do, right? So we're going to give some answers tonight. We're going to ask some questions, and we're going to get into it. Dr. D, let me know when you're ready for me just to go into the presentation. Do you want to wait on a couple?
We're ready. Let's go. No, let's get going.
All right, well, let's get going. All right, let's get in here and get into the presentation. And this is going to be interactive. It's going to be, engaging. I'm going to ask you guys some questions because I want to see who we have in the room, want to fill the room out, and just be engaging. So whether it's chat, coming off mute, whatever have you, we're going to be engaging and interactive throughout this session, because I want to ensure you all are understanding what I'm saying, right? Want to make sure you're getting it, okay? So let me make sure I can share. All right, and we're going to get right into this. And did I say Wealth Creations is our company? We're Wealth Creations Consulting. That's our parent company, but we do have a WCC Tax Advisory right now. Currently restructuring, rebranding as we speak, to kind of separate our tax advisory company a little bit and restructuring some things. So, but Wealth Creations Consulting LLC is our parent company. Okay. All right, let's go in here and put this to the side. What? Let me go back out, stop sharing, because I did forget to share my sound, because I do have something. Share sound. Yes, perfect. Right. All right, now we can get into it. All right, so I just want to start off getting some engagement going on. Whether you're new in business, seasoned in business, what do you see that could be a single most tax challenge to you, or what has been? When you think of tax time, when you think of having your taxes done or doing your taxes or whatever the case may be, put in the chat. Let's get some interaction going on. What's that thing, that one thing that you just said, I don't get about taxes, or I want to get more information, I want to learn more. Put some things in the chat around that question to open things up and get things started. What is that single most tax challenge, right? What is it about taxes and tax time? And even, on your personal, if it's your first time filing your business taxes, about your personal taxes. So either personal or business, what are those challenges that we have around tax time? Because I know everybody just love tax time, right? Everybody just fly right through tax time, don't have any problems. Cassandra, you're gonna laugh by the end of this. Yeah, just keep laughing because you're gonna be laughing by the end of all this, right? um, okay, let's see what we got in the chat. Not knowing or having all the deductions. Okay, that's good. Okay. Receipts, that's a big one. Receipts. Dr. LaShawn, what specifically about the receipts? What part about the receipts? You say having receipts, having person complete my taxes that says they know they
Just
need it.
having all of the receipts, just keeping up with all of them and being able to recall them when it's time.
Perfect. Yes, we're definitely going to get into that. Having a person complete my taxes that says they know what they need as a business owner, but they really don't. Impacts be dressed. Oh, got you, Dr. D Nicole. Yes, absolutely. Tracking all my expenses, Tyler, good. Knowing all the various taxes that come up. Got a paper from the franchise. Yes, that franchise and excise tax is something else. That's totally different from federal and state. That's another tax that each state has. They call it different things. And in most cases, there's a minimum, regardless if you do business or not. There's a minimum tax that you have to pay. So you do have to keep track of that annually. That's an annual thing there. All the things that could be used on taxes like deductions and credit, yes. Working with my bookkeeper, yes. Tracking and balancing it all, yes. 500 for Tennessee, but guess what? California, they busting everybody out. It's $800, Tangeray, in California, okay? It's no joke in California. How to switch tax preparers. All right. Okay. Yes, that could be something. I had a young lady last tax season. She's a new business owner and she was really stuck to her person that was doing her taxes on the personal side, but she wasn't really understanding on the business side of things. And she was asking her questions that didn't even pertain to her business entity. So she was going to get like 3,000 back with that person. And when we did her taxes, it was like over $15,000 that she got back. And that made it easy for her to switch right there, right? Texas is high too. I think Texas is up there. It's up there. I'm thinking off the top of my head, maybe like $200-300 or something. But definitely California is $800 for sure. All right. So awesome. So we're gonna talk through some things tonight to help with some of those challenges. Let's get into our objectives for tonight. Let's put them all up. We're going to be talking about business entity and structures because, yes, because 800 is crazy, right? 800 is crazy. So business entity, we got to talk about business entities and structures because what you pay in taxes and how you pay taxes is directly correlated to how your business is set up, the business entity and structure that you're in, right? So at the Secretary of State, when you start, or the Department of State, when you start with your setup, That's what dictates right there. Your tax journey begins right there when you set your business up. Okay, we're going to talk about getting organized. But like the doctor was saying, with the receipts and having all that stuff together, it is an absolute must to get these maximum deductions and tax savings that we're going to talk about tonight. We have to be organized. That's how we beat the IRS. And most people have that fear of the IRS because they are not organized, because they're not prepared. But when you're prepared and you know the law, they just another man or woman, right? There's no fear because you know you're organized and you're doing things according to the law. Okay, then we're going to talk about the difference between tax preparation and tax planning. Okay, tax preparation and tax planning, two totally different things. Okay, how many of us have heard about tax planning? Whether it's the mention of the name, we might know somebody who's doing it, we might be doing it. If you know or heard of tax planning, put a 1 in the chat for me. Awesome, awesome, awesome. Great, tax planning. So we're going to definitely know a little bit about tax planning before we get off here tonight. Okay. What are the strategies? What are the tax strategies, right? What are these tax strategies that can help us save a lot of money on our taxes? Like there's a code, a book of code, over 7,000 pages of nothing but tax strategies and codes, right? And so we don't need to know them all. We just need enough to know how to help those things to help us bring down our tax liability. And the average person only needs maybe 5 to 7 strategies, if that in most cases, to be able to minimize their tax liability. We're going to talk about some of those codes, right? Because when you're doing things, you want to have that confidence and of knowing, okay, this is in the IRS code, I'm following code, you know, and all that good stuff. Okay. And this ultimately how to pay the least possible taxes legally. Okay. Is what we're going to be discussing. So with our business entity structures, okay. So if you do nothing but start, you know, creating products or services and exchanging them, and you have clients and customers, but you never incorporate your business, you never organize your business at the Secretary of State, register it, or anything, then you're simply a sole proprietor, okay? You're a sole proprietor, that's the default structure. You're using your social, 100% of the liability is yours, right? Every debt that comes into that business is yours. You know, if something was to happen, and someone wanted to sue you, they would be suing you, and they could sue you for your personal property. Your assets are exposed to that. They can go, you know, your home, your car, they can, you know, do all those kind of things. So a sole proprietor is not good for protecting your assets, right? And also, you are liable to the government to pay self-employment tax of 15.3%. Okay. Those are your Social Security and your Medicaid taxes, right? And we're going to get way more into that later. So this is not the structure that you want to have to build wealth, right? This is strictly something to take away from you, because if anything happened, it's all on you. Okay. So at the very minimum, we want to talk about a limited liability company or an LLC, right? Most of us, when we start a business, we may start as a single member LLC, okay? A single member LLC is just you're the only member, right? So for IRS purposes, IRS looks at you as a sole proprietor for tax purposes. You still have your protection, right? You have your liability and assets protection. It's just that for tax purposes, you're going to be looked at as a sole proprietor. And that's why if you're a single member, you still file your business taxes on your personal tax return. And you use a form or schedule called Schedule C. Okay. So that's as a single member. You can't be sued for your personal property when you have things set up properly. And 100% of the debt belongs to the LLC and not you as the member. You're just a member, right? You're not an owner, you're a member. So you're protecting yourself and you're separating yourself from your business. But notice, as a single member LLC, you're still paying that 15.3% self-employment tax, right? So we're going to get all up into that. So here you see, you can begin and start to obtain some wealth here because you have that liability and asset protection. Okay, so here's your 1040 in your Schedule C, right? And we know the deadline for these taxes are April the 15th. Okay, so this is your 1040, your personal income tax return. And then your Schedule C is what shows your profit and your loss from your business. And these two forms are filed together as a sole proprietor and a single member LLC. Okay. So now when we get into multi-member LLCs, multi is just what it is. So it's not just you anymore. You have at least one more member. Okay. And at this point, you want to make sure you have an operating agreement in place, right? You decided to bring on a partner, bring on someone else. You want to have an operating agreement in place that spells out your role and responsibilities, the other member, how much the profit, your profit sharing, your loss, how much you're sharing in loss and in profit. You want to have all those things written out at this point. And so now, as a multi-member LLC, you no longer, things are changing now. You no longer are going to file Form 1040 anymore. Now, you're going to be filing Form 1065. Okay? And I'm going to show you that on the next slide. You'll be filing Form 1065 and receiving K-1s, right? Again, we still see that 15.3 is still here. So this is a 1065. So this return has to be done. The 1065 has to be filed by March 15th for multi-members. Do we have any multi-member LLC business owners here? If you're a multi-member, put a 1 in the chat for multi-member. Any multi-members? Okay. All right. So no multi-members. Okay. So the multi-member is 1065. That's filed by March 15, so that you can get a Schedule K-1. Each member, Dr. D and I are members of this LLC. We have to file this multi-member LLC by March 15. Dr. D will get a K-1 and I will get a K-1. It will spell out how much profit she made based on our operating agreement, because we're going to have that spelled out in there. And then it's going to show her expenses, her portion of the expenses. Then she's going to take her K-1 and file it on her personal tax return. I'm going to take my K-1 and file it on my personal tax return. So things get a little different once you become a multi-member LLC and moving on up. Okay. Then your deadline for your personal return is back at April 15th. So that's why this deadline is a month ahead, so that you can get that K-1 and file it on your tax return. Okay. Okay. So the next entity we'll look at is an S Corp. Do we have any S Corp business owners? Do you file your taxes as an S Corp? Put some ones in the chat. If you close this out. If you're being taxed as an S Corp. Awesome, awesome, awesome. Okay, so an S Corp, so you're still an LLC, right? But what you've elected to do is to be taxed as an S corp, right? And so that election was done on Form 2553. And so you're asking the IRS, hey, I want to be taxed this way because I know as an S corp, you know, I'm not going to be paying as much taxes as I would be with the LLC, which we're going to see in a little bit. Okay. So your return is not a 1040, is not a 1065, but you're now filing an 1120S now. Okay. And we're going to see that next. And that is also due on March 15th because that's a business return. Just like the partnership or the multi LLC, those are business returns. Okay. You're going to get a K1 and all that good stuff. Now, you then have to become, as a S corp, you have to become an employee of your S corp. You are an employee owner of your S corp. And the S corp is the employee. Okay, so you have to get a payroll, you have to be on salary, your S corp is going to pay your salary, you get a W-2 at the end of the year. Yes, we're going to get to all of that, Jamila. What if you didn't make any money as an employee? Okay, so we're going to get, you're going to get that answer shortly, Cassandra, when we go through the breakdown of everything. Okay. So the government says as an S corp, you have to pay yourself, or your S corp has to pay you a reasonable salary. Your S corp, which is your employee, has to pay you, the employee owner, has to pay you a reasonable salary. Okay. Your total net income is now split into two buckets: reasonable salary and distribution. Okay, and we're going to see a visual of that shortly. Okay, so on that distribution, and this is why this is so powerful, on the distribution portion, there's no SE or self-employment taxes on those distributions. That's what makes this option so exciting to people, because your whole salary is split into two, but you only have to pay federal and state taxes on one portion, but not the other. Okay, so let me see if I can get to the breakdown to show you how this works. So this is the form Cassandra will be filling out every year. You know, her tax person will be doing a 1120S tax return for her by March 15th of every year. Out of that, she will be produced a K1, okay? And that K1, the same way like the 1065 for the multi-LLC, that K1 is to be reported on your personal tax return, okay? All right, and I think I have an example here. Let's hope it works. It was doing something crazy. Okay, can y'all see that spreadsheet? Put a 1 in the chat if you can. Okay, so I'm gonna have to stop and, okay, it's paused. Why is it paused? Okay, I'm gonna stop and reshare. Okay, got it. All right, so perfect. Y'all can see it now, right? Okay, good. Okay, great. Okay, so this is an example. Let me see if I can blow it up just a little bit. Make it just a little bigger, too big. All right, so this is an example comparison of an LLC versus a S corp, and to see how much tax savings you can have if you were to switch your entity from a single member LLC to an S corp. Okay, so over here is the single member LLC. Okay, sole proprietor or single member LLC falls in the same category. Let me put this on for questions, so I can see the questions as well. Okay, so this person brought in, let's say you brought in, we're gonna call this you brought in your business 125,000 in revenue. Your expenses was 25,000. So your net profit was 100,000. This is what everything is based on. It's based on the net profit, okay? Not what you bring in, but what you keep, right? So we want to focus on our net profit and keep our expenses down, and we want to have more profit, right? So in both cases, you see that we kept the net profit the same. S Corp, single member LLC. So remember I told you there's two buckets that this money has to go into. This 100,000 has to go in a reasonable compensation bucket, and then it has to go into your corporation's profit or distribution bucket, okay? So this is where you have to do a little research. You have to, it's a whole process to figuring out, well, what percentage do I put it as my salary and what percentage do I put, you know, as my corporation's distribution? Well, you got to be careful because you don't want to raise a whole lot of red flags with the IRS, because you have to actually have a written, something written as to how you came up with that salary, right? It needs to be comparable to someone in that same position. No red flags, please. Exactly. Someone in that position, you know, in that same position, if you had to hire somebody and pay them, what would you pay them in that position? Or someone outside of your industry, your office, what are they being paid? So you have to do a little research and make those numbers reasonable. Some stick with 50-50, some do 60-40, some do 40-60. That is totally, you can work that out with your tax person, or you know, come up with it on your own, but you definitely don't want to be doing, you get 20% and then your business distribution is 80%. Red flag. Somebody put a red flag in the chat, because I know they got the little red flag you know, emoji in there. So that's a red flag. Okay. Your compensation is only, there you go, is only 20%. And then now it wasn't reasonable. Was it too low or too high, Cassandra?
It was too low.
Okay.
And I didn't know, like, okay, what is the threshold? So if it's $100,000, what would be considered reasonable?
Yes. Okay. So again, you and your tax person have to sit down and come up with that. There is a step-by-step method of coming up with that. But again, the average, not saying that is the right or the wrong, but 50-50, 60-40 has been what I've seen a lot in that area. Can't go wrong with 50-50 if you ask me. But it is a step-by-step, and it's based on your industry, your experience, just like with any job you would go to, right? If you've been in the industry for 20 years and I come in, I'm fresh out of college, they're not about to pay me what they paid you, you know? So all of those things considered, you got 20 plus years in school, you know, in school and education, you know, your experience and all that stuff, and you should get paid accordingly, right? Okay. Yes, we definitely want to get there. What your revenue, because everybody want to know what your revenue and business need to be before filing the S Corp. So we're going to see this again later, but generally, and not your revenue, right? Because some people can have $500,000 in revenue, and then their net profit is only 30,000. That's crazy, but it could happen. So you want to focus on your net profit. What should your net profit be before you look at going into becoming an S Corp? And that would be 50,000 net profit or more, right? And the more your net profit, the more it's going to make sense. right? And that's just a roundabout number because that has to be inputted, put in there and look at all the variables with that. But if you're netting 50,000, you, she's want to start bringing in, she paying out. Absolutely, I understand, totally, and it starts that way. But that's what you want to be looking at, your net. So about 50,000, and I even want to say 60 when I say that, but 50 to 60,000 is definitely probably a good place, net profit wise. Okay, so in this demonstration, we have 40/60. Your reasonable compensation is 40,000 right here. The distribution is 60,000, right? Okay. So over here under the LLC, this is what will happen with that 100,000. That LLC, and if we know we just do the math with this 15.3, we already know it's going to be 15,300, but let's break it down. And how do we even come up with that 15.3? Because there's something called Social Security and Medicare taxes, right? We've all paid them and paying them. So that 100,000 times a 6.2 is the 12.4 is the 12,400. Then that 100,000 times a 2.9 is the 2,900. And this is why, as a sole proprietor or single member LLC, you are responsible for that 15.3, because remember, when we are W-2 employees, we only pay this portion of the Social Security and Medicaid. Our employer pays the other half. But now we're business owners. We are the employee and the employer when you're a single member LLC. This is why we have to pay the whole thing, right? You're paying the entire 15.3% because you are the employee and the employer. And no one is even going to get it, right? Yeah, I won't be counting on it, you know? So that's why that whole 15.3% is paid by the single member LLC and the sole proprietor, okay? And then there's other things like federal income taxes you're gonna have to pay, state income taxes you're gonna have to pay. So roughly you're paying over 30,000 off of 100K net profit as a single member LLC. Okay, so it's like almost a third of your net profit you're paying out, right? Okay, and so when we get over here to the S Corp, okay, reasonable salary 40, distribution company's profit is 60. Now, when we get here, only this 40,000, right, is subject to the taxes over here, the Social Security and Medicaid. This is your salary, right? You still have to pay Social Security and Medicare taxes on that salary. You have to pay a portion, which is here, and then your S Corp. Now, over here, you're the employee, your S Corp is the employer, as the same thing over here. So y'all splitting the difference. Your S Corp is going to pay 7.6%. You're going to pay 7.65%, actually. 7.65%. Okay. That's just only on the 40,000. Can you see the difference here? Over here, it was on the whole 100,000. And over here, it's only on your salary, your reasonable salary. That 60,000 is not subject to these taxes over here. That's why this is a lucrative strategy, and the strategy a lot of people use for tax purposes. Okay, so over here, your total taxes for Social Security and Medicaid is only $6,120. Whereas over here, we know it was 15,300. Look at the difference. Almost $10,000, $9,180 with this one strategy, right? One strategy, you can, 10,000. And the more your net profit is, of course, the more this number and higher this number is going to be, right? So that's an illustration on the potential tax savings that you can have when you're netting 50, 60, 70, 80, 90, 100 and on up net profit income. Okay, was that pretty clear? Pretty clear.
Yes.
What am I? Oh, slide point right here. Any questions around that before we move on? All right, perfect. All right, let's keep it moving, getting organized. And your job is to log all risk and have more than. And your job is to log all risk and have more than 25K. Yes, absolutely. See, to further decrease the tax liability for those getting scared. Look, so yes, you are going to be able to and with that, if I'm understanding what you're saying, Dr. D, there's a fine line there because especially as an S corp. Now LLC, knock it down. But when you get to be an S corp, hold on. Matter of fact, this is what I'm gonna do. I'm going to stop and get you to tell me exactly what you're saying there, Dr. D, so I understand.
Oh, I was just letting them know because I know they're thinking, oh, I'm gonna have to pay $30,000 in taxes. No, you're not, because we travel a whole lot. And so our expenses are way more. But if your expenses are higher, if you're making $125,000, it's your job to track all of those expenses and to have all of your stuff tracked so that you can lower your tax expense. And 99% of the people on here have single member LLCs. So most of the consultants do, because they're not at the point to be moving over to an S corp, because as you can see, is after you've made the 100,000 or 50,000 in net that you move over. Because other than that, how can you pay yourself? Like, you should be on payroll with an S corp. You should have a payroll company that's actually issuing you a check every week, every 2 weeks, once a month, whatever your pay schedule is. But we can't pretend with an S corp like that. I don't know, it sounds kind of dangerous to me. I wouldn't do it. I just recently went to an S corp. I think this is year 2 for me. And I made sure that I could pay myself for 6 consecutive months first at the negotiated salary of a CEO of an education corporation in lieu of the amount of revenue that my business was bringing in. And so that's what kind of took me longer to make the jump, because I don't want no problems with Uncle Sam, and I don't think none of y'all do either. We can't hear you, Comilla.
I'm talking and this is mute. That is great information and so on point. Absolutely. So it is a process of getting there. But I know with, just having the knowledge of this information, because you all are in contracting, and let me tell you, these things can happen fast. I mean, y'all income can shoot up and change in one contract, right? You can make 100K in one contract. You see what I'm saying? It could shoot up, and things can change really quickly. So, but absolutely, that's a great strategy, planning out to make sure you can pay yourself in your business for a consecutive and consistent amount of time before you switch over to the payroll. And again, it's a reasonable salary. Cassandra says she paid herself a little too low. IRS ain't concerned with you paying low. They're concerned with you paying high. because you pay yourself too much, let me see. No, you said you had what? You paid way too low, right? Okay.
Yes, way too low.
Okay, yeah, that is true. So they want you matching it or more than what your distribution is, right? So yeah, you do have to up that sum, and it's based again on your net profit. Okay, so let me go back in here and share. All right, got that. Okay. Okay, we're sharing. All right. So before I go there, before I go to the rest of that, tracking our income, because we talked about getting organized. Let me see in the chat, what is the best tracking method? I have a single member LLC. Tracking method as far as Dr. D asked them what they're tracking. Is that their income, their expenses? What are they tracking? Okay, and while we're getting that, what are some of the ways how in our income right now? Because that's just where I was about to go. Tracking your income. Okay, if I was to ask someone, if I was to ask someone, can you put your hands on real quickly? Like, do you know your numbers? Like, what was your revenue for 2023? What were your expenses for your business in 2023? Okay. Overflow manifested income and expense. How do you track your income and expenses? Okay. And we're going there right now. We're tracking your income and expenses. So y'all tell me, how well do we know our numbers? How many of us know what our 2023 income, expenses, and our net profit was, right? You have to know your numbers. That's one thing you need to get in the habit of. Most of these merchant companies and online payment platforms, they always sending you summaries and always sending you different things, but learn how to work your reports in there, know how to get your, get your profit and loss, know how to get your balance sheets, know how to get your, what's your other, revenue, your profit and loss, your balance sheets, your cash flow statements. And there was one more, your cash flow statements. Okay. So QuickBooks, I hear a lot of people talking about QuickBooks. So QuickBooks is a great way. It covers just about everything that I'm about to talk about when it comes to income, expenses, tracking your mileage, storing your receipts, going back to the question earlier. Where's Ms. Who's that asked the question earlier about the receipts and knowing how to store those receipts? Well, QuickBooks has all of that, right? And a lot of our receipts now, they come electronically to our phones for a lot of things that we're doing. So there's a feature on QuickBooks where you can create an email. And it's like at QBODocs.com or something, and you put the first, like I got WCC receipts or something like that at QBO Docs, and you can create that email. So whenever I get a receipt, I just forward it to that email, right? Really quick, really easy, no matter where I am. If it's on my phone, I'm gonna forward it. If not, I'm gonna take a picture of it and email it up to that QuickBooks email. It goes straight into your QuickBooks account, right? So then you'll have those receipts right there. You can take a picture, and then right from the app on your phone, you can upload it there. So many different ways that you can keep up with your receipts these days. Yeah, so definitely that's a good way. Whatever software, bookkeeping software you're using or accounting software you're using, they should have a features or somehow you could just make that easy. And I like to do it from my phone because it's so much easier to do than from the computer. Okay, let me see. Yep, I can go right to my email and see what it is. Right, let's go WCC. Business email. UB. Let me search that, see if it come up. I'll do it as if I'm sending an email, maybe it'll do. Of course, I don't want to come up now, QBO. QuickBooks. Now, usually I just have to put in this attachment. Okay, of course, it don't want to come up now. Receipts. Okay, I will put that in, make notes, because I don't know why it's not coming up now. Receipts and QuickBooks. And I'll look for it again. Try one more thing. UB. Oh, there we go. Okay. All right, I got it. So chat. So the suffix is QBOdocs.com. And then you get is at QB. You put the at sign. And you get to put whatever QBOdocs.com. You get to put whatever prefix you want to put in front of it to create that that email. Okay. Right. And that's that. But that will help you. It's life-saving. I mean, couple nanoseconds, and my receipt, before I can even pull out or put my seatbelt on, I already sent it up, and it stores them right into your QuickBooks. Okay. All right, and we already talked about the software, the accounting software. QuickBooks is a great one. There's other ones to compare it with, but QuickBooks is really great as well. Okay. Another way to maximize your savings is just organizing your tax documents, right? Having somewhere where when the mail comes in, you know, you have throughout the year, you're getting different things. You have a certain space where you put all your tax document, getting ready and organizing things for tax season. Just makes it easy. All you got to do is gather up your documents. You got everything that you need, and it just gives you a peace of mind. Okay. Come back in here. And if you have it on your phone, the app, you can on top of the phone and click status. Yes, forward your receipts, forward your receipts from mail. I always do it from, I never did it from my app, so I'll look into that one too, Dr. D. I always do it right from, I just do it, you know, when I have the receipt, I share it up to an email, put in the email address, and I just send it that way. So I have to try it this way too. When did you give out a 1099? That needs to be mailed out or sent out by email by the 28th of this month, because the client needs to get it by the 31st. So absolutely, the latest is the 31st of January to have 1099 sent to your, which I'm in the process of working on myself right now, getting those out by the 28th. I'll be emailing, so.
Comilla, I have a quick question. So the 1099s, do you give them to companies that you purchase from or just people?
Anyone that you paid, that you've paid to do a service for you or for your company, that's who you're giving a 1099 to. If you did any independent contract agreements, service agreements, or anything like that, then you need to, like we have different methods. Like we have people do work for us at Well Creations. Like we contract people out to do certain things for us. On the contracting side, we have subcontractors, right? And we put them in as independent contractors because they're not a part of our company. We don't pay them on a regular basis, nor do we give them benefits. So they are categorized as independent contractors. And if you pay them more than $600 in a tax or calendar year, then you have to send them a 1099. And before that, they should have done a W-9 also. With your independent contract agreement, you give them a W-9 to complete as well. Okay. And then that's when you're able to provide them with the 1099 because you'll have all the information you need. It'll be on that W-9. Yes, and your payment processor should send for you. Yes, you can have it set up that way if you know, I do all that, myself, but you can have it set up to where have, like, if you have the payroll and all that set up, they can set up and do all that for you as well. Yeah. Did I answer your question? Okay. But yes, you're giving it to people who you've paid and you've done a service for your company. All right, so let's move on. Okay, so let's quickly talk about, we had a lot of people say that they are familiar, you're welcome, that they're familiar with, that they're familiar with tax planning, right? Because a lot of times we're used to hearing about tax preparation. I know just a short few years ago, it was just tax preparation. That's all, we've known tax preparation. We get that done every year. Well, tax preparation is just that, right? That's called compliance, right? That's the least. I lost my chat info when I move. Please add anything else, please. So that's called compliance. That's just you doing the bare minimum. That's what needs to be done. You gotta prepare, calculate, file, have someone do that on your behalf, every year, right? That's tax preparation. And with that, you're limited, right? Because when you come to your tax person in January through April and you come to them, we're looking back, right? We're looking back at what you've done. We're like looking in the rearview mirror, the previous year, looking at what you've done, right? We can't change anything about what was done, right? We can do the best of our ability with you and with your documents and what you provide to us, how organized you were throughout the year is definitely going to play a big role as to what your tax preparer is going to be able to do by preparing your taxes. So organization is key in having all your documentation, all your expenses and business and all that stuff tracked very well. So, but we're looking back, right? We're looking in the rear view. Okay, that's tax prep. But tax planning is just that. People come and they plan for the next year all the time in different areas. They plan for their business, they plan for vacation, they plan for weddings, they plan for, their birthday the next year, they plan for this and they plan for that, but we fail to plan for taxes, for our taxes, right? So with tax planning, that's just what it is. Like right now, even while you're getting your tax preparation done for 2023, we got to quickly shift and begin to look at and think about, okay, how am I going to plan in 2024 for my next tax season? And that's the mindset of the wealthy, the 1%, right? They are not looking back, they're looking ahead. So that's simply the difference in tax prep and tax planning. So that looks like you sitting down with the tax specialist, a tax professional throughout the year, coming up with the plan, looking at your business, your personal life, looking at the different strategies and things that's going to help you save on your taxes, right? Because if you're paying 10, 20, even 8, 10, 20, 15, whatever to the IRS, there's a quick fix for that. But you got to plan it in advance, because when you come to your tax preparer at the end of the year, it's in most cases too late, right? But you can plan to be successful in that area, because there's too many strategies out there to not, be able to help with that. Okay. So that's the main difference right there. Okay, so a couple winning strategies we're going to talk about. It's too late now for me this year. Well, it's too late for 2023 for tax planning, but it's not too late for to plan in 2024 for the tax season that's going to come up in 2025. Okay, that's the only thing you got at this point, is to plan this year, and then next tax season you're on top of things, right? So entity change, we beat that. We talked about that. We looked at the LLC, the S Corp. We already talked about that. That strategy was almost $10,000 in savings just in that strategy change. The next one we're going to talk about is 179 deduction, hiring your children. The Augusta rule is another strategy. Potential savings of over $70,000. Okay. So we already talked about if you're in the wrong entity, if you're making and keeping at least $50,000, then you need to sit down, talk with someone, and to see if you are ready, because it's more than just the net income too. You have to be organized, like Dr. Chanel was saying. You got to be organized. You got to make sure you can pay yourself. You got to have that kind of discipline and things of that nature to get those savings. So it is something you want to sit down and talk with somebody about, to see if that's a good fit for you right now overall, with everything in mind. Okay, you will save the 15.3% by not paying the self-employment tax. Okay. The 179 deduction deals with furniture, any type of lease equipment, vehicles, things of that nature. Any type of equipment that you use for your business. Like if you make t-shirts, then if you have to buy one of those big press machines and all that kind of stuff, that will count towards the section 179, because that's equipment that you need for your business. And you can write off 100% of those depreciation expenses when they're used for your business. When it comes to vehicles, there's a couple variations there. Your vehicle do have to be over 6,000 pounds in order to get that full deduction in that year, right? Not that you can't get the full deduction, but if it's under 6,000 pounds, then you have to spread out those deductions over 5 to 7 years, okay? So get 6,000 pounds, you put it in service, the same tax year that you purchased the vehicle, you can write off the entire cost of the vehicle. The vehicle doesn't have to be brand new. It doesn't have to be paid in full. You can have payments on it. It can be financed, all that good stuff. So this is a great strategy that's often overlooked as well. Okay. All right. Hiring your children. Just had somebody call me today about this, wanting to get going with integrating their children in the business, and $13,850 you get to write off. Okay, so Natasha, was it a car or an SUV?
It's an SUV. It's a 2019 Santa Fe, Hyundai Santa Fe.
Okay, Santa Fe is probably going to be under 6,000 pounds. Yeah, that's probably going to be under 6,000 pounds. But what you could do, is Tangeray still on here? Because she normally puts this in the chats.
I got you. I'm on the girl.
Appreciate you. Tandra is going to put in the chat, is where you can go online and you can see the list of vehicles that are, they do meet the standard for the 179 deduction. But a Santa Fe, yeah, definitely is not 6,000. But because you purchased it, you still would be able to, let's say that car was $30,000, you're going to be able to take, most people do 5 years. You'll be able to take $6,000 off your taxable income for the next 5 years. Okay, in that example.
Okay, thank you.
You're welcome. Okay, that vehicle is only 4,800. Yeah, I know it looks kind of small even in my mind, because I love the Santa Fe's too, but I know it's less than 6,000 pounds. Okay, so Tangeray put that list out there. Okay. Okay, Katie asked, payroll for your kids, even if you're an LLC. That is correct. If you're an LLC and you integrate that particular strategy, you do have to run payroll for them. You will have to do that. So yes, ma'am. My dream Jeep is on the list and I can't wait. Oh, my daughter loved the Jeep Wranglers too. Absolutely, absolutely. So yes, you do have to for each child. But if you ask me, you got 2 to 3 kids, you're looking at 13,850 per child. If you get a good payroll company and, some stipulations, some minimum, some things we can discuss, but depending on what your taxable income is, it could definitely be worth it. Okay. And payroll system, I didn't say a particular payroll system, but QuickBooks has a payroll company. There's Gusto, there's the regular ADP, then you have Roll by ADP, you got Run by ADP. Just about everybody got a I even saw today Square has a payroll compartment. So it's a lot of places out there, Gusto, ADP, QuickBooks. And if you're using QuickBooks, that might be the way to go because they already got everything they need in their software. And Dr. D has a referral for Gusto. Okay. Certainly Bentley's are on the list. Big boys. Do kids then have to file their taxes? So if they're under 21, no, they don't have to file the returns. Okay. In that case, let me see the standard deduction. Oh, you're referring to hiring your children 21 under, long as they're between this age range, 8 to 17, sometimes younger than 8, but no more than 17 years old, then they won't have to file the return. They won't. As long as they're under 17, think about something else. So that's a no, Katie. As long as they're under 17, they won't. Okay. Absolutely. That's another strategy. I already got it. That's a strategy for sure. That's a great strategy. Augusta rule. This is a no-brainer strategy for everybody that comes to me. Like, this is a no-brainer to do the Augusta rule because Yes. Job description, social media tech. Someone was just telling me that's exactly, they got a 12 and a 14-year-old, and they're gonna do all like their social media. They're gonna do all those things that kids that age love to do. Put them to work. Put them to work. And it did mention they will need to have a job description, but that's easy, right? That's easy. So put those children to work. If they're like 12, 13, 14, 15, 16, put them to work. Okay. There you go. There you go. And you're still paying them the same money, you know, the same thing everything you're doing for them now, you're just tracking it and keeping it like clothes you buy, like money you give them, things of that nature. You're just making it make sense, right? Augusta rule. So this rule allow any business owner to rent out their primary residence, right? Rent out their primary residence to their business, okay? So you can do this 14 times throughout the year. 14 times throughout the year, you can literally rent out your primary residence to your business. You would have to do a search and find maybe 3 comparable spots in your area. Let's say it's $800, you know, $800 for the day or whatever, $1,000 for the day. But you can do that 14 times throughout the tax year. It's some steps, boom, 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 things you put in place. Again, we're covering ourselves on every basis. We're covering everything. You know, some steps you have to take and put it in place. But once you do that, you can schedule to have those business meetings at your home, right? You are renting out your space to your business. And the IRS came up with this rule and came up with this strategy, okay? And the income you get from your business, you don't even have to report it. I'm renting out to my business pays me personally, comes from my business account to my personal account, but that's not considered income. I don't even have to report that income. It's not taxable. Okay. As long as it's your primary residence and not like a Airbnb or full-time rental property. Okay. There's some specific record keeping, some documentation you have to have in place in order to just have everything you need. But that rule is a given. No matter where you are, you can implement the Augusta rule. Okay. Probably sport. Oh, it's next. Okay, so it's time. Okay. And I did not know you was going to be on this call tonight, Cassandra. But I have plenty of these testimonials. But I said you by far have to be the most comical one. And I didn't know who were going to be on the call tonight, but I just want to share with you a quick clip of a testimonial that I got from an awesome client, her and her husband. And just going to share that. And y'all let me know. I did put on my sound. And let me know if y'all can hear it.
Hey guys, my name is Cassandra Williams. Let me just say about Wealth Creations and Comilla over there. She is doing an amazing job. So I had a tax preparer that has been with us for like 7 years, and it was very nice because she was close to the family, and it was very convenient because we just sent it over there, but it never got done in a good amount of time. So let me tell you, when I first got introduced to Comilla, somebody said, you have to go see her. So let me just say, it was very hard to convince my husband because he doesn't trust anybody. But when he went, he looked at her credentials, her background, her experience, and her testimonials, hands down. Our taxes were done within a couple of weeks. We got our tax return, and it was the most I've ever had. So let me just say, go there. I love Comilla and Wealth Creations. Talk to you later. Bye.
Isn't she animated? Isn't she animated? Thank you, Miss Cassandra. Yes, that I remember that conversation like it was yesterday. And let me tell y'all something. You better know what you're talking about when you talk to Mr. Williams. You hear what I'm saying? And I was actually on vacation on the beach, honey. And I took that time. I said, no, I'm going to talk to him because I know he's already caught on edge. So I'm going to take this time to speak with him. And he was like saying nothing. Cassandra called me back. She said, he didn't have any words to say. It was like, she was like, girl, that never happens, you know. So
Never. I really I mean, my husband is a researcher, so he's looking at your credentials, like he's looking at where you went to high school, like literally to validate your greatness. And for you to convince him, oh my God, I thank you forever. Let me just say that.
to God be the glory, because I was like, just there answering his questions. So, and he had some. So yes, so that is the end of my session here. This is how you can look us up on like Facebook or Instagram. I'm on LinkedIn, the same name. That's how you can get a free consultation if you have any further questions, and that's how we can be reached and contact in our website. Thank you all so much. Let me do this and stop sharing. Thank you all so much. Any other questions? Go back to the chat. Thank you, Miss Cassandra. Any questions? No, that would be so that would be Norman, but we're all in. I can't wait to meet you at the end of the month. Absolutely, absolutely. Yes. Can't wait to talk back to Norman because he and I know some of the same people and everything. So we have something to talk about.
And I think you may have missed a question from Katie. She says, is there a limit, or did you answer? Is there a limit for how much money we charge for Augusta?
Okay, that is a great question. More like your salary. The IRS likes to use the word reasonable. Like what is reasonable? But it has to be, okay, so if it's just you and your husband in the meeting space would probably be much smaller than if it was, 10, 20 people meeting in a place, like your whole team and everybody. So you want to think about things like that. You want it to be size appropriate. You want it to be, you want to put all those things in mind, not like go and get a ball, get prices for a ballroom when it's just going to be you and maybe a couple other people. So while the IRS doesn't say there's a limit, and it's not you charging, it's more so what are the prices for those comparables in your area. It could be whoever rents space, it could be at a library, it could be at a hotel, you get a nice little conference space or something like that. So those are the numbers you're going off based on the comparables that you looked at in your area. You have to get at least three, right? 3 different spaces, 3 different numbers, and utilize those numbers as to what you're going to charge your business. So I hope that helps, but just appropriate size, and even geographically appropriate, like California versus South Carolina is going to be totally different. Everything in California is expensive. So California people, y'all need to milk that one, but South Carolina, not so much, so kind of think around those terms, Katie, when you're pricing it like that. Okay, great question. Great question. You want to talk about the with the beneficial ownership interest report? Is that the one you're referring to,
Yeah,
Dr.
I
D?
think that's the name of it.
Okay, awesome. Have everybody on the list should have gotten something from, not everybody on the list, but some that are clients of mine. might have gotten an email from me about a week ago about the Corporate Transparency Act, CTA. Okay, awesome. And so what that is, now the FinCEN, which is the Financial Crime Network, Enforcement Network, what they're doing now, they are finding out that and it's been going on, there's a lot of money laundering, a lot of illegal and illicit terrorism funding, a lot of things are going on. And I'm sure they've seen an increase of number of business owners, because just in the last 3 years, I mean, I know we probably opened not 3 of them additional ourselves, so they're seeing an increase in a lot of LLCs being created, like everybody doing LLCs and things like that. But it shouldn't affect honest people who are doing the right things with their businesses and things of that nature. They're supposed to just be looking for illegal activities. So the reporting goes as, if you had your business prior to 2024, then you have 1 year, you have until January 1st, 2025 to file that beneficial owners information report. You would have to go to, let's put it in this chat. You would go to www.fincen.gov, or just Google FinCEN. Is all over the internet. FinCEN.gov. You actually have to file there. What I can do is get Dr. D the checklist. That's what I sent out to our list. There's a checklist that our tax software sent us, and it just gives you that checklist and the expectations of everything you're going to need to have and gather when you go to actually do the report. And I've already had people sending back, hey, the checklist worked great. It's very helpful. I was able to get it done. They were able to follow that. So I can get that to you, Dr. D. Yes, ma'am. And definitely. So again, if your business last year, you got into next year. If you start a business January 1st of this year moving forward, then you have to file within 90 days. It's no longer a year. It'll be 90 days. Moving forward in January 25, if you file a business or start a business, you have to file within 30 days. So I guess they're going to make that the norm. You have to file within 30 days of starting a business now. So you might as well do it when you start your business, right? Now, the penalty is up to $500 a day after, a year, if you prior to 2024, or after the 90 days until you file, up to $500 a day. Okay, that's a lot of money. For most of us, we probably have a year to do it. Make a goal, set a goal, get it done this month, right? That's out of the way. You don't have to worry about that. And you only have to do it once. But if beneficial owners change, or you add people and they have more than 25% ownership in your business, then you have to update the information. But the report itself is done once. Okay. But that they really serious about that, because they're saying $500 a day. Like, people ain't playing with that, Nobody want to pay $500 a day. So you got a year, but set a date, put it on your calendar, and don't let that date pass without doing it. And again, I'll get Dr. D, as soon as we get off, I'll get her that checklist. And then, or if there's another way you want me to do that, I can, or if I just get it to you. But it's been said to be helpful in following through the process. Okay. Awesome. Yeah, a lot of people wanting to know about that. Again, for the people who doing things the right way, because a lot of people getting these shelf companies, we see it on TV all the time, and they sending this money through these different companies, and these are not even real companies. You can only imagine some of the illegal stuff that's going on out there. And so the crime division is trying to catch a lot of those things.
And I think Natasha has a question further up in the chat. She said, do we still need to keep receipts if we have QuickBooks self-employed?
Do you need still to keep like your like physical receipts? Is that right, Natasha? Oh, she's in Facebook.
Yes, do we still need to keep the physical receipts, like make a copy of them or take
I
a
do.
picture of them?
I do. I still keep the physical. Now, you know, if you got it in your system, only way I would say don't keep the physical is if you got something like a backup, like you got your stuff backed up to a cloud or something. Because what happened if you're not with QuickBooks anymore? If you go somewhere else, you do something else. Like I keep them, organize them, keep them. The physical actual receipts. Now the ones I get from the store, yeah, but not like if it comes to me electronically, it's stored. It's stored in my email or something like that. But if I get it in my hand, I hold on to it. Even though I take a picture and send it up, I still hold on to it.
Okay, thank you.
You're welcome. For payment security, do you have to have the money in your business checking to be able to?
And let me just add, and that's really why you have to plan, because we can't hop into things haphazardly. Like you got to know what are the non-negotiables for your business. If you know that we're not playing with Uncle Sam, QuickBooks is $20 a month, I just solve it by paying for it for a full year. And if I pay for it for a full year, they also give me a discount. So now I'm only paying $200 for the full year in order for me to have my taxes in order. Because once you get going, all of it is stored electronically. And so you can still keep your paper copies. But for some of us, those of us with children and all that stuff going on, the likelihood that we're going to actually keep up with all those paper receipts, and you have to know yourself. So like, I know me, I'm not going to walk around with that plastic bag of paper receipts and keep all of the receipts. So I'm going to make sure I pay QuickBooks every year for the full year. And if money problems happen, my Kajabi and my QuickBooks are the two things that I'm always pay. So I always make sure that I have enough money to pay Kajabi and QuickBooks, because those are the things that keep my money together and that keep me making money. And so think about those things as you are planning for your business, because sometimes we'll overload ourselves by adding on unnecessary things. We got lead pages, we got this, we got that, $20 here, $40 here, $60 here, $99 here. And that typically creates the future problem that we didn't anticipate, where you have a slow month and you didn't make any money, but you still have $600 worth of expenses coming out of your account. So know what your non-negotiables are. And those are the things that I typically try to pay for all year. I pay for my Zoom all year. I make sure that I have money for Kajabi, and I make sure that I have money for QuickBooks and pay for QuickBooks in advance. And those are typically things that I will put on my business credit card as well. Just a tip for those who might be trying to figure out strategy for the 2024 year. You back on?
I'm muted again. That I said, those are good tips and good strategies. And going back to knowing you and what works for you in your business. So those are good tips there. Right. I think we had another question. Katie said, for the payments to kids under 18, we have to have the money in our checking accounts to give them. So going back to the payroll, kind of like we were talking about with the S corps, it has to be set up on payroll. So that money going to be coming out, however you set it up, weekly, monthly, bi-weekly, however, it's going to be coming out. It's going to be coming out. So you have to have that money in there. I pay for Canva, are you? Yes. Certain things you want to go ahead and knock out and get it done. All right, this has been great. This has been great. Great. Any other questions? I don't think I missed anything in the chat. Let me make note to give Dr. D, the checklist. I have one other person to send it to as well. Checklist for BOI.
Okay, and any final questions, you better get them out. Are you ready for your tax season for this year? Some people have a March 15th deadline, other people have an April 15th deadline. How
Mhm.
confident do you feel? Do you feel pretty good about being prepared? You have your everything that you need, and are you ready to go? Do you feel like you're ready to go for tax season this year? And when do you plan to file? I'm gonna tell you, it's not gonna be good for those people who think they should wait until April to file. It's not gonna be a good situation for you.
Mm-mm. And again, to those that are on our list, we've already sent out and shared with them a whole new year. This is a new year, right? We doing things different because last year I had no cutoffs and I was just taking them in. I mean, they were just coming in and coming in, probably past May, still coming in. And but we got to cut off April 1st this year. So January 1st to April 1st. And we're going to close the books after that. So people have been already booking, just holding their spot. Because once April comes, we're shutting the calendars and we're just going to work with those that are on the calendar from there because it was crazy. It was crazy. So that's a good question. How prepared do you guys feel on a scale of 1 to 5? 1 is, oh, child. And then 5 is, I'm super prepared. I'm ready. I'm ready for this tax season. 1 to 5. I saw 2.5. We on the Richter scale, 2.5 now. 2.5. 2.5. 3, okay, that's half the way there, Tyler. You getting in. Okay.
Do I
Okay.
have to, I have a question. Do I
Uh-huh.
have to file my business taxes together with my personal tax? Um, I'm LLC self-employed, not self-employed, sorry, sole proprietor, LLC.
Good question, Natasha. And I think you might have came in a little after, but yes, and I got that a lot last year as well. A lot of LLC owners would come and say they filed their personal taxes already, and now they need someone to file their business taxes. Well, as a single member LLC, you have to file your personal and your business at the same time. Okay. Because if you don't, then what that preparer is going to have to do is go back and do an amendment to your personal tax return to add in your income and expenses for your business. Okay. So yes, to answer your question, you have to file both your personal and your business taxes together.
Okay, thank you.
You're welcome. Great question. Really good question. And once you move on up, multi-member and S Corp and all those things, then it's separate. Then you start really separating yourself.
I tend to get a little confused because I have been using, I guess, a regular CPA who said that they knew business. And so, of course, putting everything in the spreadsheets and all of that stuff, combining my personal and the business stuff, because basically that's what I was doing. Then of course we got hit hard, like very, very hard, like 150, 160K hard. For real, y'all.
Ooh, child.
Yeah, so I want to make sure that I'm doing everything right, putting everything in the QuickBooks. I'm still a little confused because I've been hit so hard, so
Mhm.
I don't
Weird
feel like
right now.
nothing's right.
Mhm.
You get what I'm saying? So
Mhm.
yeah, that's just where I am.
Okay. And if you
You know
need
what I
to
mean?
schedule again with me, Nicole, to kind of sort some of that out,
Because
complimentary.
I don't see you until the end of the month. You know what I'm saying? Which still waiting on things to come in, but I'm dropping all my stuff into the QuickBooks things that you
Okay.
mentioned. So
Yeah,
I'm
but
just
if you need to do a complimentary one, just let me know. I'll send you that link. The link that was on the screen. Did you all get that? Let me put it in here.
and see in the DMV, you got to be careful and stuff. That's what we had to pay out because they'll attach that stuff to your house. And if you already we got too much into our look, they wasn't gonna come and get all my equity and take my house. You know what I'm saying? So we had to make that call. And if you work with the government, Norman is with NSA, that you can mess up your badge, all that stuff. You know what I'm saying? So
Mhm.
we just trying to make sure we're doing it the right way this year. And I just, to be quite honest, don't know what's right because I've been listening to people who say they're professional,
Mhm.
and you get what I'm saying.
Okay, so is it more just putting things into, mini want to take, is it more just, how to categorize it, how to put it in, or?
Yeah, yeah, all of that. Because you're always thinking you're doing it right. And you have people just telling you this. Then
Okay.
I feel like I'm starting over and over again, because you do it one way and then, okay, no, that's not the right way. You know what I
Mhm.
mean? And then it's just a headache. So
And you're with QuickBooks, right?
yeah.
With QuickBooks. Okay, and if it gets too overwhelming, and I know you said you're still waiting to bring in some money, things of that nature, if it's overwhelming for you to keep track of that, because that is gonna be key and essential to everything, like making sure things are categorized properly, because it's like a calculator. You only get the right answers when you have the right input, right? And so it's the same way with QuickBooks and anything else, you have to put things in there and categorize it correctly. And first of all, categorize them, right? Because if you
Mhm.
don't, it doesn't pick up those expenses and income. But second, categorizing it correctly, putting things in the correct place. If that's overwhelming and that's too much, I would tell anybody you might want to look into getting your bookkeeper to do that. If that's
And they want I'm talking, they want big bucks behind that. You know what I'm saying? So that's why I'm like, okay, slow my roll.
okay.
I think I'm doing the best thing first is dealing with you.
Okay.
First, but yeah, I want to come equipped, so I'm gonna have my stuff. I just
Okay.
don't want it to be frustrating for you if it's all over the place because again, from my previous experiences and how we've been hit. But
Did
I
you,
know this is a whole different thing.
okay, that's fine. Did you ever get the spreadsheet? Because I normally send out a Excel spreadsheet. It's like a expense and income template. Matter of fact, I can drop that here
I
too.
don't recall if I got that. I did get, because I did
You got one of
set my
those?
my thing, and I got the thing about the stuff that Dr. D was talking about, that $500 thing. And I'm like, Lord,
Okay.
I don't want to operate on it be my luck because it has been our luck.
Check out
So,
that spreadsheet, that template spreadsheet. That's just something I sent out to clients to kind of give them an idea of how they need to be categorizing their expenses and their income. It's a template. Use what applies to you, and you know, just don't worry about the rest of it. But this information comes straight off your Schedule C, like the things that
okay.
you're able to write off, the categories, right?
Okay.
And things of that nature. So to kind of help you put it in some perspective as to what things may go in this category, what things may go in that category, type of thing. I don't know how long you had your QuickBooks, but sometimes they will do one complimentary like they'll have a real live person come get on the screen with you, and they'll
Mhm.
help you set things up. They help you, learn around, get familiar with the software, show you how to categorize things, how to link your account. They'll spend about an hour and a half with you, one time, so
Okay, I didn't know that. This is fairly new after I talked to you that I got it. The other one is some other stuff that I got and filled it out, and it was like it was crazy. Ended up having to pay in order for them to help you with it. So
you're
yeah.
good. You're definitely good. I will call them like Monday and set up
Okay.
a day and a time. Don't forget, because I think it is a window of time that you have.
Okay.
And they will take that time and go over everything with you.
Thank you.
You're welcome. Yes, the tutorial, they will set it up. Yep, come right on your screen and start going through stuff and walking you through it. Do we have to categorize things matter a lot? Does how we categorize matter a lot? Office space and budget. To a degree, mastermind, that's like I categorize it sometimes as professional how do I have it in there? Professional, mind drawing a blank. It could go education, professional, I don't know if it's professional services or whatever. Sometimes I put my training and things of, coaching, anything I spend money on like that. Sometimes I put it under that personal. I don't have a Schedule C in front of me, but as long as it's in there and it's in, you got it somewhere, continuing education or something to that effect. As the main thing is making sure you get that expense in your QuickBooks. That's the key. And then categorizing it the closest possible. Tandra said, I think education. It could go into education. You can create whatever you start doing it with, keep it that way. Just remember, make a note or something. This is what you're using it for, and kind of stick with all your coaching and professional development, I think is how they got it. Or maybe I created professional development. But wherever and however you start that expense, just stay consistent with it, because QuickBooks will start picking up, those algorithms will start picking up and mimicking your habits, and they'll start asking you, will all of Zoom, Canvas, AI, all this stuff, will it be software all the time? And once you say yes, anything that comes in with that same tag or whatever, it's going to automatically categorize it. Okay. But it has to learn your patterns, and how you're doing things, your transactions and all that stuff first. Okay. So the key, just get it in there. Then you can figure out how you want to categorize it, but stay consistent. And when you look at all the different choices, find the closest thing to it, and you can always add your own categories as well. Okay. Zoom, Canva, AI stuff. I think I put that stuff on like software, like a, general business expense software or something, just the closest thing possible, but stay consistent. Let me see, we could getting our hair done. Yes. What do I put? My hair, I think my hair, my nails. Of course, you had to create a section for that, but I'm trying to see what I put it under, what I named it, so to speak. But yes, you can deduct all of that. All of that is a deduction, right? That's a part of what you need for business to show up, look good, feel good. That can be easily explained, honey, to any IRS agent, especially she a woman. I'm hoping she a woman that come to me and ask me about these things. Don't you have on makeup and stuff today? And you looking pretty good, So yeah, those things you can definitely to write off. I can't think of the category I put it under, but hair, nails, pedis, manicures, massages. I think I might put it on health and wellness, because child, if it ain't health and wellness, you gotta, for all your beauty, health and wellness, I think is what I categorize it under. Something like that.
But if you're using that what is it called? The HFA, what is the thing our for educators, we have the what is it, HFA, whatever, our card that we do put money, all that money is coming out. That's our money that we put in the head, and we're using that to do like
the
the
health
massages and acupuncture and stuff. Does
yeah.
that still matter? Okay.
You can use all of that for that, and see, that's a double whammy right there, because you're getting a deduction just for your health savings account, that spending payment for that. That's a double whammy. So if you want to categorize it that way, you can do that too, because you can use that to purchase those type of things. You can even use it on Amazon. You can use it on Amazon, like Walgreens, Amazon, those places. As long as it say MSA or HSA approved, you can use it on those online stores as well. So, yeah. Yes, ma'am. I do have other business expenses and hired services. Yes, my massages, all those things. You need those things, right? It's a part of doing business. To show up, be your best self, feel good. From a good question. Wigs are grip. Ooh, honey, so, um, yeah. So all of those things, all of those are part of your whole uniform. And Essie say uniform because you're putting it on, right? I ain't thought about it that way because you putting on this hair, you putting on this makeup, even glasses and prescriptions. Oh, so I know Tanika, oh my God, you should have a bunch of write-offs, shouldn't you? Having all those fly glasses, right? So prescription glasses and all those different things. Now they do have a category for that in there, and it's a write-off. Yes, you can pay for all that with your and the HSA is a health savings account or spending plan. You put money, they'll take this money out of your salary, out of your paycheck every however so often you get paid. And then that money is set aside, is not taxed or anything, is set aside, and you're able to use it for out-of-pocket doctor's expenses, eyeglasses, anything dealing with healthcare and things of that nature. So that is a strategy in itself.
I can kick myself. I just found out that I lost $650 of the money because it was like over. I had like $1,200 left that I didn't spend, and 650 of it I just threw it out. Now, y'all, that's coming out of our pocket, out of our,
Yeah.
And I threw that away not knowing. So I'm just now finding out I can buy my fly glasses, all the different things. I don't know. All I did was go and use it for medical stuff and prescription. I did not know those other type of things because they block you when you try to swipe something like eye drop, but then you can go buy glasses. It's crazy. So, but I just found these things out. But I just found out last week there's $650. I just had to just whatever.
Wow.
Yeah.
So unfortunate. Yeah, they use it or lose it type thing. They are very limited and specific as to what you can and cannot, use it for. But it is a great strategy because that money came off the top. That was less taxable income for her that she had to pay. So overall, it's a good strategy.
And can you give a better explanation for, so like we have a business and I was just talking about this, Katie. That's what I'm about to ask her to explain. So I was explaining to the group how you can't separate a tank of gas. So when I go so just like today, I had to go get some stuff for the business. I was out of copy paper. I was out of some other things. So I stopped at the service station, the gas station. I filled up. I went to get, and that went in, I filled up on my business account because I'm also in my business vehicle. And I'm going to Menards and to Office Depot. But my tank of gas was $70 and it goes to my business expense. My mileage goes to my business as well. But from that same tank of gas, I had to go pick my son up from school, and then he went and worked out today. I just categorized that as personal, but that tank of gas, you can't separate a tank of gas. So I can get, the gas can always go into the business expense, but my mileage can be separated as personal and business. But I'm trying to get Katie to understand that your gas is a business expense.
Okay, this is what you have to do in the beginning, because this is what the IRS is going to say. What's the percentage of usage in that vehicle? The vehicle that Dr. D is driving, she has to put a percentage on that. What's the percentage of usage on that vehicle? It could be 90% business, 10% personal. Unless she has a separate car, right, that she uses just for personal business, for personal use, excuse me, because that's what the IRS says. They said, do you have another vehicle for personal use? So if you say yes, you have another vehicle for personal use, but you use this one maybe 10% of the time, you can actually say 100%, right? Because if you have this vehicle and you got it just for business, The only way you can say 100% is if you got another vehicle for personal use. Okay. Now, let's say you got another vehicle, but you say, I use this particular truck 90% for business, 10% for personal. Then that means every expense that you utilize for that vehicle, you can take a 90% deduction for your business. But if you use it for 100% of the time and you got another vehicle that you use for personal, then everything and every dime, every piece of gas, every repair, car insurance, car payment, everything you do for that business is 100% write-off. But it's all about the percentage of usage in that vehicle for business and for personal. That's why you have to track what? Both. If you only have one vehicle, you got to track for both. Because how are you going to know your mileage and you get, all that stuff for your business if you haven't tracked your personal? You have to track both to know what's the percentage. What's the amount? What's the percentage? My total mileage was 20,000. That's total. And when you track your personal mileage, it came out to be 10,000. Make it easy for numbers. 10,000. So then you use that mileage is 50%, right? Use half 10,000 for business, 10,000 for personal. You're going to have to track both to know. But as far as expenses is concerned, you put that percentage on there. The IRS is going to ask you, Katie, if you only have that one vehicle, they're going to say, who else can tell you? Nobody know your percentage of business use for that vehicle but you and your personal percentage usage. So they're going to ask you that. And if you say 50-50, then now you're able to write off 50% of those expenses.
Can I ask a follow-up question? I see some other people here. Like me and my husband both have a car, right? So and mine is the one I use when I do business stuff. It's not a lot because I do a lot of virtual stuff.
Okay.
So I get the percentage, like whatever percentage of time I figure out I'm driving my car in business.
Yes.
If I pay for gas or tires or whatever, it all is going to be a deduction.
Mm-hmm.
Because Dr. D also encourage us to get gas fleet cards.
Okay.
And I was going to give one to him. He's not really an employee of mine, although I guess you could tell me how to do that. But so then can he charge gas on his card or only on my car? Because mine is the one that we're going to be claiming stuff.
Okay. Does your husband,
So
okay, so
that's
the
gonna be
the gas card is in your business's name, right?
I got to apply to him once these net 30 things go through.
Oh,
I'm
okay.
following
Right.
Dr. D's
Okay.
protocol.
Okay. All right. So it'll be in your business's name. Now, so do your husband work or do any work or help out in your business at all or do anything in the business?
Mental health support, not really.
See, my husband does. He does a lot, and he does a lot of business running around. Does a lot of so we do. Like if when I apply for cards, I'll all the time is like, give me two. Minimum, give me two. Give me two cards, and he'll have a card for his and I have a card for mine. But if you're saying he does not do anything in the business, then technically you can only use that card for your car in that case, if he doesn't help. But get him the help, do something, then he can bring him in and then he can use it for his car and all those kind of things. To be technical, get him the help in the business, some kind of way.
But I thought they've always said that when you're a couple, you don't want both of you all attached to the business thing. I don't know, like for purposes of if one get hit, the other one doesn't. But it makes sense for us especially where we're living and all that, for us to do it together.
Mhm.
So I don't know. Again, these are just things that's what happens when you got everybody telling you something and you
Oh.
just believe in what you have no other choice because you just don't know.
You just don't
Yeah.
know. Okay, I never heard that one.
Yeah, like be careful with one, because then that means the other one. Like I've been told, don't attach Norman to any of the stuff. So in case something happened, we good. I'm like, we still got hit with them taxes.
Both
Yeah,
of y'all, right?
right.
Okay, did I miss? Let me look and see if there's anything else. I guess I need to put it in my business name. Okay, you reading that? Dr. D said, does he pick up any supplies for you? Anything like that?
And there's a question about easy pass stuff, toll roads and all that. Can those be business expenses?
Yeah, if you're in your business vehicle and you're traveling for business when you go through, because toll, parking garage, all of that, all that stuff is anything. If it's pertaining to that vehicle and it's a business vehicle and you use it for any percentage for a business, those things are going to be write-off, like your detailing of that car, getting it detailed, of course, your car insurance, any payment, and the interest on the payment, all that, and put all that in there. Everything about that car, parking, some people got to pay for parking, of course, tolls, things of that nature, all that's a business expense.
I have a question. I took my vehicle with my private credit card
Mm-hmm.
just because I don't think that they would have given me a business loan because my business just got started. So how do I pay back to the business, or how does that work?
Okay, say that again. You said you got a business loan. Repeat your question.
I got a private loan for my vehicle.
Okay.
So I pay back privately through my private credit card, but I would like to claim it for my business because I use it for my business.
Mm-hmm. Mm-hmm. And you
So,
can. And you
okay.
can. Yeah, and you can, even though you bought it, it don't have to be in your business name in order for you to write it off or get a deduction for it, because the IRS knows when business is just getting started, like you're not going to get no loan to put it in your business name. People don't see that until like maybe 3 years down the road sometimes, but you're perfectly fine. You can still get that right off that deduction, even if it's in your personal name.
Okay, because one of the things I noticed, I attach my QuickBook only to my business credit card. So
Okay, so you've attached, your
my
QuickBooks is linked to your business credit card
yeah.
and your business account. Okay, so you may have to, and Dr. D probably can jump in here, but you may want to transfer the payment, your car payment, to your business account if you wanted to show up in your QuickBooks, because you definitely don't want to connect your personal account to your QuickBooks. That's a whole nother headache right there.
Okay, all right.
Mm-hmm.
Thank you.
You're welcome. Great questions.
You got me confused again. So why don't we do that? If, as I mentioned before, every, my filing, everything has been done together because that's what I thought we were supposed to do. Well, that's what the last CPA that I use. My business, you know how you have to do, like Norman and I, we could not, we made the mistake one year, he filed first. And then that meant I could not use all of my, what do you call it? Because we were a couple, I could not, when I filed separately, I had to file the way he filed. You get what I'm saying? And
Okay.
then we learned from that to let me do all my stuff first. You know what I'm saying?
Okay.
With that being said, you know, from my regular 9 to 5, that, and then with the business expenses, because I haven't made anything,
Okay.
I still was told to put that under the same thing. But what she's just asking, unless I'm misunderstanding her and you,
Okay.
I recognize you said about purchasing the vehicle with her under a personal loan, and you then said don't put it over in the QuickBook thing. Well,
You're right.
Isn't that what I'm doing? Everything is over there already. Okay, you get what I'm saying?
Do you have your personal bank account and credit cards connected to, or are planning to connect them to QuickBooks?
I'm telling you, I don't know what I'm doing. That's what I'm saying.
Oh,
Yeah.
so the
Right.
clarity there comes in. You don't want to connect your personal account or your personal credit cards to QuickBooks. Only your business accounts, you know, and your credit cards, your business credit cards, things of that nature.
Okay, but the expenses from the business that came out of my personal stuff, because I don't have the business credit, I put on there, right?
All
Right.
right. So,
Okay.
so do you have a business bank account?
I do. I do.
Okay, you have a business bank account.
I
That's what
do.
you want to set up and have connected to QuickBooks. And like I was saying to Natasha, you're gonna have to transfer that money, have that money into your business account for them to take it out. You know, your payment every month, so it'll show up in your QuickBooks.
Okay, for car purposes, but since
For
I
car purposes.
some things I pay out of my out of my personal, because that's just where it was.
Mm-hmm.
That's okay though to put over in my
In your
when it
business,
was for business stuff. Okay,
only for business stuff, for things that's coming out for business, go ahead
right.
and put that over into your business checking account and have that connected to and linked to your QuickBooks, because that's the way it's going to show up and how you're going to
But
get
if
your money.
but if I've messed that up, if I didn't do that, some I've done honestly, and some I
Okay.
have not. So, but like, okay, if I paid for Dr. D's services, hey,
Mhm.
wherever that money is at the time is where
Okay.
I've done it. You get what I'm saying?
All right, so
Of- of-
here's your solution. So you can manually add and create expenses in QuickBooks. You're going to have to go back and look at the major things, the big things. You'll know those big things and those things that you paid a good bit. Look for those things in your personal account and some other expenses. You can actually go in and manually create expenses into QuickBooks, because that's what you're going to have to do now. You have to do that manually, because you don't want all of your personal transactions going up in QuickBooks. That's going to be, you think you got a headache. That's going to be a headache.
Please repeat that. I lost you. My computer went down. We got bad storm going on here, so I had to get back to my phone.
Okay.
What'd you say?
So you're gonna have to go back to through your personal account and your statements. You're gonna have to look for all the big ones you're gonna know right off. You know some things, you probably got them written down, some things that you spent on. Look through for business expenses. You're gonna have to manually put them into QuickBooks. You can add and create expenses and of course add receipts for them at the same time. Whenever you add a receipt, it says, do you want to add an expense or create an expense?
Uh-huh.
So you got receipts for those things that you paid. When you
Uh-huh.
upload those receipts up into QuickBooks, it's going to ask you, do you want to add an expense? That's when you create that expense, tell it what it is, categorize it, and it'll go right up in there just like it transferred into there.
What if you had your stuff over in PayPal? I do that so I can at least have another way of managing. I don't know. It may have not
Okay.
been right to most, but
Okay, so then go into QuickBooks and you may be able to add, and it should pull it in. You can actually add app payments into your QuickBooks. Okay, you have to link I know we did it with Square. I didn't link PayPal in there, but my Square transaction shows up in my QuickBooks.
okay.
Okay, so you have to link your and it's under app transactions in QuickBooks. You can go in there and connect your PayPal to your QuickBooks, and hopefully it'll bring everything over, and that'll alleviate you having to go through and manually add them.
Okay, cool. Thank you.
You're welcome.
And can I add that this is like a lot of us get confused with why we have to do things the right way. So Camilla's giving it to you from the tax professional end, and I'm giving it to you from the user end.
Mhm.
At the very beginning, when everybody starts the mastermind, I explain to you, it is simply movement of money. And so you can't get the expenses or the deductions if you are not showing evidence of the expenses. Most businesses start out in the negative. Like majority of them do not start out making money.
Right.
You have a home-based business. The reason why some of us can't file utilities on our business taxes is because we continue to pay for utilities out of our personal checking account. It is essential that we separate personal from business, and it is the same money you've been using. But the difference is you got to get out of your comfort zone. We're accustomed to getting out, and it was me. That's why I'm able to tell y'all this, because these are the mistakes that I made. And so I'm trying to help you to not make these mistakes. I'm the debit card queen. I bank with First Community Credit Union. I got a Cardinals personal credit card. I had to leave that thing at home because I continue to use that personal card when I needed to be using the business card. I gave you a simple solution at the beginning of the mastermind. This is for everyone. You get paid just like me. I got paid on the 15th and the 30th of each month, whatever your pay period is. You get paid. Your check hits your personal account. It's been hitting your personal account for 10, 15, 20 years. You've been doing this same thing. I know it's hard. Like, I know this is hard because it's requiring you to do something different. You're going to take, let's say $2,000 hit your account. That's your paycheck. You're going to take about $1,500 of that and move it over into your business checking account, which also requires you to detach all of those personal payments, because all of your monthly expenses have been coming out of your personal checking account. So you got to go into whatever app, whatever banking program, whatever company is taking those deductions and change that deduction location from your personal to your business. That's for your car note. That's for your car insurance. That's for anything that you would use for your business, your utilities. You cannot run a business without electricity. Is it going to give you 100% of deduction? No, it's going to give you the percentage of the home that you use for your business. Is it uncomfortable? Yes. You will not get a reward in your comfort zone ever. That is universal law. And so if you take the time, this is January, it's a new year, and make a commitment to yourself. I'm going to get this together this year. I'm going to separate my business from my personal, and it's not a one-shot deal.
Right.
It probably took me 90 days to get 90% of my business expenses over on business and to keep personal on personal. But in a home-based business, a lot of the stuff that you do, it's a part of your business. When I leave and go to the airport, I'm using my business vehicle. When I go to conferences, I'm using even before I had a business vehicle, I had a regular vehicle that had to get me to the airport. I had to pay parking fees at the airport. I had to get rental cars. I use valet. The IRS don't say what level you can have. I'm accustomed to valet. I use valet in my business. The IRS ain't gonna say, Chanel, you can't use valet. That's my standard of living. You know, when I turn a light on, if I think about it like this, if you were in a office space, wouldn't you have to pay utilities? Wouldn't you have to have things for your clients who come in? You use internet. That's a business expense. Can't not one of y'all run a business without internet. Can't not one of y'all run a business without a cell phone. Can't not one of y'all run a business without a computer. But we're paying all of these expenses out of our personal account. And then when this time comes, it makes it really hard on you because now you got to go back and play backtrack, and we leave a lot of money on the table. And that's why you will see somebody who made $125,000 spending $40,000 on taxes because you did not properly log your expenses, which create deductions, which lower your tax benefit. So anybody who's not already separating your personal from your business, it is simply the movement of money. Because right now you don't have a lot of money coming in. So when you move that money, it's going to be paid anyway. The difference is one of them you're going to get a tax deduction on, and one of them you're not. In your personal, you are not. In your business, you are. So move the money over, make the calls to the company, take one day. It typically, and y'all got the advantage of internet and all this up to date stuff. When I did it 7 years ago, I had to call everybody and be like, and some of them I just didn't know how to do it. And they had to walk me through it and change it on the phone. But even then, it was maybe an hour, a couple of Fridays. I do Financial Friday. And so I go in on Friday, I'll dedicate an hour, have a list of the calls I'm going to make, the accounts I'm going to change over. The next Friday, make a list of the accounts I need to change over the next Friday. And if you have a budget that you work from, you already know what you pay. And if you don't have a budget, that's a whole different conversation. Like if you don't know where your money is going and what bills need to pay, and it's not written down, it should not be in your head, and you should know exactly what expenses. That's what makes it easy when you're working from a budget. You see Kajabi payment, $149 a month. This payment, $72 a month. Now I need to change these over into my business account. And I transfer. And by the time I transferred everything over to my business, I was only leaving $200 or $300 in my personal account, just in case something came through, slipped through, like my Apple Card was one that used to slip through all the time. Well, the payment wasn't but like $60. So I had a cushion to catch that. But then in the end, you have, all of these deductions. And that was my next question for Comilla, because she does wealth creations. A lot of these business owners are going to get probably the biggest tax return if they've done things appropriately and have been really good at tracking. They're going to get a really great tax return. What are some recommendations you would give for them or ways that they can utilize their tax return in order to maximize it and put it, how we see that we're getting $8,000, $12,000, $15,000, and we think I'm finna go to the Maldives. I'm on my way to Greece. What are some ways that they can utilize their tax return in a way that will help their money to make more money?
Oh my goodness. Several things. One of the first things, and as always, and I hope this is like a rule of thumb, just in general, when we're making money in our business, it's always reinvesting back in our business. First of all, we want to make sure we're doing that to keep the business, moving forward, reinvesting in things that's going to take your business to the next level, whether it's some kind of marketing or some type of training or whatever the case may be, but something that's going to keep your business moving forward. But if you're getting a big refund, 10K or so refund, and if you haven't already started investing, like in mutual funds, there's mutual funds out there. I'm not big into the crypto or whatever, but there's different types of what's the investments now that they're doing. Want to say, I don't know if it's options or whatever, but there's crypto things you can invest in. There's other businesses, ventures and things of that nature that you can invest in to make money, but quick returns. Let's see what quick returns you would. Most everything is just you're going to be investing and putting into your future, really. Trying to think of some like quick turnaround type things that you can do, because y'all are already in a business. You have a certain business that you're working. Let me see, I have to think about some quick things you can do. But the main things is investing back in you and putting back in the business where it's going to take that business to the next level. What else on the one of my mind, drawing blank on ways and things you can do to invest. Now, one of the main things, I know something that's on our list for this year is real estate, right? That real estate, like truly, like who owns the land, who has the how to say it, who has the land has the wealth. So definitely real estate. There's things like tax liens, like things we're looking at all kind of things, but that's like tax lien and tax deed properties, where you can get properties and fix them up for a little of nothing. Sometime $1,000, $500, you're getting a whole house that you can, so real estate investment and other businesses is going to be things that you can invest in, but real estate is definitely should be a top priority for all of us on this call, because there's so many different ways you can enter into the real estate market. Flips, buying wholesale, tax deeds, tax sales, Airbnbs, things of that nature. So that is definitely something, to start thinking about. Real estate, passive income coming in, monies that's coming in every month. You do something one time and it just keeps coming. So definitely one of the first things I will say is real estate. For sure.
I don't know if you saw my question. Y'all were talking about moving everything over, but I pay my mortgage out of my personal. But I got an office, a legitimate, sizable office upstairs, and I can have and host a lot throughout the house with space. And so, because I know that there's a formula for that as well. So I don't know, do I transfer the money over into my business to pay the mortgage too? Or I know you were talking about utilities and all, but I'm just asking that question.
For the mortgage. Well, let me put it this way. So most people on the call are single member LLCs, right? So we have to think in those terms as well. The IRS calls you a sole proprietor, right? For tax purposes. You still got your protection and all those things for your LLC. But the IRS called you a sole proprietor, right? And so they expect a lot of things coming from your personal. What Dr. D is talking about is just getting in a place to where you're really starting to separate yourself from your business. So if you just started your business and your mortgage is coming out of your personal account, which typically it would, because you probably had that mortgage before you had your business or whatever have you, and you've been paying it out of your personal. Well, the IRS is not going to, that's not going to be such of a red flag that your mortgage is coming out of your personal account, but you're getting the home, because it's home business deduction. That's what it's called. You're in your home, but you have a space for your business, right? So for that to be paid out of your personal, I don't see that being an issue from the IRS, because it is a home business deduction. As long as you have properly, literally, you got to pull out a root tape, you got to tape that, unless you got your plans and it tells you, how big that space is or whatever, and you compare it to the full space of your house, and you have that percentage, I don't see it, that the mortgage part being a problem, because you got your mortgage as a personal, it's a home. So I don't see you running into a problem there. You probably wouldn't necessarily have to, but if you're looking at completely just moving everything, then yeah. But other than that, your mortgage, I think, is a home office expense, home business office expense. Mm-hmm.
Okay, so that's what Norman's listening to about the utility things, because he pays that. So do I move? I mean, do I put it in my name?
It's just like the mortgage, take a percentage.
Take a percent. Well, that's what Dr. D and them, they were saying about moving our utilities and all that other stuff. It can be in his name?
Yes, yes, it can be in his name. It's still your home, it's coming from your home, it can be in his name, yes, the utilities, but just
Right.
transfer where it's being paid from is what she's saying.
Okay,
Yeah,
okay.
just the account is being paid from.
Hey, can you, okay, he's trying to understand it.
Say what now?
Okay, no, I won't. You said transfer. Those utilities,
Right.
you transfer it because you can't,
Transfer what?
like when we're pay it from my business account, like to put the money over and just pay it from the business account.
Well, then should they be in your business name?
Well, they're saying it doesn't have to
It
be
doesn't have to be in the business name, it can be
because
typically,
not
yeah.
the house.
It's for the home, so whomever is the bill, because some bills are my husband's name, some bills are mine. But it's more so about where it's being paid from, the account is being paid from, more so. Mhm.
You'll talk to us about that at the end of the month. Thank y'all.
You're welcome. We'll get more in depth with that. And that's when you're transitioning everything over. Again, all these things, it takes time and it's a process, but it's when you're transitioning over. The IRS truly understands that you are, a small business owner and you are a sole proprietor. But these are good habits to get into for sure. And making sure everything is, that, you're paying it out of your business account. Okay. Can you deduct having storage units, hold supplies using your business? If it has your business stuff in there, 100%, Kimberly, then you can write that storage off, those fees, those expenses, 100%. But if you got some business stuff in there, some personal stuff, then you have to say, once again, it comes down to percentage. What percentage of the items in the storage is personal and what percentage is business? Okay, it's all about percentage and you have to put that number on there based on the things that are in that storage. And you're welcome. The IRS ain't going in there and check. They're not checking how much stuff you had in your storage. You have to give that percentage. Okay. Did we miss any questions? Not find my business because, okay. QuickBooks may have categories, mainly presets. Oh, Dr. D answered that one. Okay.
I think you got them all and oh, I'm not on the screen. I think you got them all. And I just want to, this is just my perspective now. I ain't no tax professional. You got the tax professional right there. But I think that because we are educators and we are so accustomed to playing by the rules, many of us are rule followers, which I'm trying to, my goal in life is to help y'all to understand that the rules weren't made for y'all. Rules were made to prevent chaos. But for the people who understand that those rules are not for them, the IRS is for you. You should not be afraid of the IRS. They are giving you the guidelines. I know everybody in y'all, well, not everybody, but most of us got that kid who will push all the way to the limit without going outside the rule. I know I got that one in my house. He will do, but he not going to break the full rule, but he going to manipulate all the way around that rule. And you will never catch him breaking a rule because he understands the rules. That's your job, to understand what the rules are, what are the guidelines, which ones support you. And it is your job to collect all of the guidelines or to have someone hired to collect all of the guidelines for you so that you can utilize them to your advantage. It's not cheating. It's not being deceptive. It's not stealing. That's what they're there for. You have 475 tax codes that are for small businesses, and they may have added some more since then. It's your job to either know them or hire somebody. I'm not trying to know them. Hire somebody to know them for you. But if you go to a typical H&R Block, Jackson Hewitt, Cousin Buki, Poo Poo, Nay Nay, they're going to put it in TurboTax, and TurboTax is going to give them the standard deduction. They're going to give them what the norm is. You are not the norm, and I need us to not consider ourselves the norm.
That's great, 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 great. We've been conditioned from grade school, right? From the time we got into school, like, and I'm talking to educators, right? But even when we were in school, we had to raise our hand and ask to go to the bathroom. You know, there was a time when we could eat. There was a time when we had to sleep. There was a time, you know, we were being programmed from the beginning. Like the bell rang, and that goes even back pre our date, you know, back in even the manufacturing time period and all of those things, when they had the bells, right? They had the bells in the manufacturing plants and things of that nature. And these people were on schedules. They had to be to work and had to do, they were just preparing us to get into that rhythm and flow, like Dr. D was saying. It's kind of like now we have to kind of, you know, Dr. D, one of her favorite movies is The Matrix, right? You know, and so we got to kind of have to get out of that routine type thinking, that traditional type thinking, because they have, and it's not easy. It's not easy, right? We've been doing what we've been doing for a long time, and we've been programmed. So now we have to be reprogrammed. And how do we do that? We have to be re-educated. We have to read more things. We have to be around, you know, different people that speaking and talking different things that we can go research and do our due diligence on to put a new thought, because the only way to bust a myth is to find the truth and then reprogram your mind with that truth. The super wealthy, let me tell you, they are doing this stuff and they don't feel no kind of ways about it. Trust me, they don't feel like they're breaking no rules or anything, because a lot of them probably didn't even go to school, you know, because they taught us go to school, graduate, get a diploma, go get a degree, you know, and get a good job. But it's those ones that broke all those rules that's making the money, you know, because they decided not to follow those norms. And although it wasn't a good thing back in those days not to go to college, you're not going to college. That's unheard of. That's unheard of. When my daughter told her she wasn't going to, if you don't want to go, you don't have to go, because start your business. You ain't got to go to college if you don't want to. But one time that wasn't even heard of. You're going to college, period. You know, and so, you know, because that's the way the mindset of our parents and their parents, how we were brought up. But we just have to do our due diligence. The IRS has it all laid out there. Organization is going to be key. When you're prepared for something, you're not afraid. Organization and preparation combats all of that. When you're organized, you prepare, and you have the correct knowledge. When you have that correct knowledge, I mean, like, I remember when there was a real fear of the IRS, right? Now I have no fear of the IRS. Like I go back and forth. I now have position in my mind. You are a woman or man just like I am. Right? There's no inferiority syndrome here. You know, as long as I understand, like Dr. D, I understand the rule, I understand the law, I know how to stay within that law and work that law. You know, but you're going to have to be organized, and just getting more understanding. So the more you're hearing it, the more you're around it. Of course, it's counterintuitive if this is your first time really hearing these things. It's like, hold on, that goes against everything that I knew, or everything I was taught, or everything that I was, you know, that I learned. You know, it's going to be counterintuitive. But those are things you're going to have to really look into, do your research, get with someone like Dr. D said, get with a professional to get more clarity and understanding around those areas, because that's all I do is educate. I educate people. And that's why by the time they get off the call, to the best of my ability, I'm going to try to educate you to my fullest, to help you feel more comfortable in the strategies, the steps, what we're doing. I'm giving you the code. I'm giving you the law. I'm going to let you know where it is, you know, where you can find it, right? so we can all be held accountable and we'll feel comfortable in what we're doing. Because I tell people the IRS, they my friend, because I know I can write a letter, I can say something. I dispute them over $26. I was like, send me my money, and they were mad. She was like, well, it's just $26. I said, well, if I owed you $26, you would be writing me, trying to take $26 out my tax refund. But when I crunched and did my numbers, y'all owe me $26. They wrote me and said I owed them $1,006 or something. This was probably about 10 years ago. When I did it, went back and did my numbers, I said, matter of fact, y'all owe me $26. And they wrote me a check for $26. So again, knowledge, preparation, organization is going to give you that confidence and that peace that you need. Amen. Amen.
Amen. Amen. All right, y'all.
One last thing. The QuickBooks thing, I want to make sure I have the right one. I keep hearing Dr. D add something else on the back end of it. QuickBooks something you keep saying. Is it the regular QuickBooks? Self-employed. Yeah, I have to make sure I had the right one. Okay.
All right. Well, folks, I hope this has been helpful for you. I hope that you feel more at ease and that you know what you need to do between today's date and March 15th for a couple of us and April 15th. Well, we're not going to wait till April 15th, so we're going to rebuke that in the name of Jesus. Okay.
Way early.
Yeah, we're gonna stick right. We're gonna say February 15th. And we're gonna hope that you know what to do, you feel more comfortable, and that you have a better understanding of business taxes and business tax planning. And while this session is not an all-inclusive, now you have a contact, and that's always my goal for small women in small businesses to have another woman. I ain't got nothing against men, but this is what I'm gonna tell y'all. Women understand women, and we understand how one another think. We understand our biology, our physiology, and then when you connect with somebody who you feel a little more aligned with, you will ask them that question that you think is a silly question. And I want you to be excited to ask silly questions. Trust me, I ask silly questions. I'd be like, okay, Comilla, I know this sounds crazy, but here it is. And then when she answers, it's like, oh, okay, got it. But you need those people in your small business. You got to have the people who can support your business where it's at, as well as where it's growing to. But we got to first see ourselves as CEOs, and we got to stop seeing ourselves as just teachers and just educators. You are a CEO of a business, and you need to step into owning the fact that you are a CEO. A CEO is a person who goes out and makes it happen. They go out and they find solutions. They go out and they hire the people that they need to do the work for them. CEOs are not people who are doing all the work themselves. And so I need us to step into that mindset and operate as a CEO. Tax time should be an exciting time for you. I'm in year 7 in my business. It's an exciting time for me because I've done all of my paperwork. I have everything. The small things that I need to do are probably pretty minor. And all I'm doing is sending a link to the tax person to get it done. And I'm sitting back waiting on the response. If they need anything from me, I know that I have it because I took the time. For those of us who are not fully set, it's okay. It's okay because now you know what you need to do. And we're going to make sure that we are not only set up for this year, but for next year also, by separating our business expenses from our personal expenses, by tracking our expenses, and by also understanding if you don't take the deduction, you don't get the deduction. Like, you've been paying and you're not getting anything for it. I would rather pay and get something for it because you're going to pay anyway. You've been paying a cell phone bill for 10, 15, 20 years, and all you got was a receipt. Now I pay my cell phone bill and I get a deduction. You've been paying gas for your car all these years and all you get is gas in your car and a receipt. Now I put gas in my car, I get a receipt and a deduction. So it doesn't matter what, it's not your job to understand what percentage you get. That's not your job. That's that tax lady's job. Stop doing other people's job and stop worrying about other people's job. When you pay people to do the work, hold them accountable for doing the work. When I subcontract with people, the expectation is you're going to meet my standard. And if you don't, we're going to have a conversation and then I can choose to find another subcontractor or give you time to self-correct. You have to have a CEO mindset, and that's a part of having a CEO mindset. You do not need to have all of the answers. You shouldn't be out here researching all of this stuff. You shouldn't be trying to become a mini tax professional. I only know these things because I've been filing taxes in my business for 7 years, and my husband been filing for 30 years. That's why I know these things. Every year, it's the same thing. They say, do you have this? Do you have that? And then I came up with little systems for, let me make sure I had it. So when they ask, it's already here. Let me make sure I do this. So when they say it, it's already here. And so now that's how I'm able to give you, and I never claimed to be a tax professional. You see, I bring Miss Comilla on because that's her area. But we have to stop being scared to be great. But we also have to stop trying to be I'm gonna do my own taxes. No, you're not. No, I don't care how many degrees you got in math. Let the business, let the tax lady do your taxes because she knows the 475 codes and you don't. You only know math. And math is not the answer to taxes. It's knowing the codes. So I hope this has been helpful. I want to thank Comilla for coming on, for sharing her expertise, and for being so kind and so patient to take all of our questions. And Comilla, give us our closing words so we can close this out.
Well, thank you, Dr. D. It's such inspiration. You know, you only know math. Yeah, that was funny, right? Math is not the answer. So I will ditto on that. And also don't try to do your own business taxes. I know a lot of people that's been just doing their personal and they're like, I'm not trying to do this business. And some will try to do their business. Don't try to do your business taxes. You are definitely going to miss out on some things if you try to do your own business taxes, right? I just want to thank everybody. It's been awesome. It's been great. I'm looking forward to it this tax season. Like Dr. D said, tax season is good for me, even though I'm usually doing mine late last, because I do everybody else's first. But it's going to be great. We've been preparing, we've been planning. So now it's just execution time. And they say 80-20. 80% is planning, only 20. It's easy. Now she's got to push a button. She's planned, and now it's time to execute, right? So we just have to get into that planning mode as business owners, and that'll come. But let me tell you, every class I come and talk to with Dr. D, I tell them, you all are light years ahead, right? I've been in business for quite some time. And it took, when you don't have somebody like Dr. D, to kind of walk you through when you're getting started in your business, this could take 5, 7, 8 years to get to the places where she's pushing you all to go. Right. And when you get that organization, you know how they say sometimes, God don't bless mess. Well, sometimes we have to clean up our, get things in order. Because if God was to bless you with the overflow, what would happen right now if you got an influx of $100,000? Like God bless us through contracting this month with $100,000 came in. Like what are you gonna do with the influx of $100,000? And it's going, like, where is it going? Like where? And you're not in control, and you don't have those things going in the right places. So God is getting us all in position, ready to be blessed, because he wants to bless, but he's showing us how to organize things, how to get it in place so the blessings can come and they can overflow us. Okay. Well, thank you all. Here to say, what's tomorrow? Join tomorrow. Oh, join tomorrow on YouTube at 10. All right, join tomorrow at YouTube at 10 Central Standard Time. All right. Well, thank you guys. Look forward to seeing some of you, hopefully all of you, and y'all be blessed and y'all have a good night.